Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week's economic calendar is packed with events that traders should keep an eye on. The Federal Reserve is expected to maintain interest rates during its two-day policy meeting, with attention focused on the dot plot for insights into future tightening. While recent economic data has been mixed, with moderate inflation but robust job growth, the central bank continues to monitor banking turmoil and consider tightening lending standards to rein in inflation. The Fed will review the latest US inflation report at the beginning of their meeting, with expectations of a 0.3 monthly increase in headline consumer prices and a 0.4% rise in core inflation. Investors will analyze the reports to assess the effectiveness of rate hikes in cooling inflation without hindering growth. Additionally, there will be updates on producer price inflation and retail sales figures for May, as well as the weekly report on initial jobless claims. Across the Atlantic, the European Central Bank is expected to diverge from the Fed by raising interest rates, with further increases anticipated in July. While Eurozone inflation remains high at 6.1%, the ECB aims to maintain stability and sustainability in wage gain and inflation. Conversely, the Bank of Japan is likely to keep its ultra-easy policy unchanged until these conditions are met. Stay tuned until the end, as we will be sharing our technical analysis on foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar rebounded from two-week lows as traders awaited inflation data and the Fed interest rate decision. In the digital currency space, Ripple's transactions have experienced significant trading activity, recently with the price per XRP token showing positive momentum due to increased network utilization. Wall Street, on the other hand, has seen a remarkable rise in US stocks, defying recession fears and banking crises. Driven by mega-cap stocks, better than expected earnings, and optimism regarding the Fed rate hiking cycle, to rise 20% from their October lows, which is one definition of a bull market. A 20% gain from bear market lows has in the past heralded further upside for stocks. Shifting to commodities, crude oil prices fluctuated this week, influenced by false reports on a potential US-Iran nuclear deal. The US crude oil benchmark is expected to bounce around the $75 to $67 region in the coming week. And finally, let's have a look at gold. Gold prices secured a second consecutive weekly gain, reflecting expectations of a Fed rate pause. Gold's choppiness in recent weeks was due to a lack of conviction over the economy that hadn't helped tip the market's balance either way. So now, let's delve into our technical analysis. We'll start with USD-ZAR, currently trading within a descending channel. A close above 18.75 may trigger a correction towards the channel's top, while a break of the channel could ignite a rally towards the previous resistance. Moving on to the Dow Jones analysis. A close above 33,940 might ignite a rally towards 34,200, with bullish momentum indicated by all EMAs. Regarding crude oil, a close below 72.2 could lead to further declines towards previous low points. And lastly, gold experienced choppy trading on Friday. A break and a close below 1957 could trigger a sell-off towards 1944.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.